Hi, my grade 11 students. Today I am here with you to discuss about new supporting service. It is insurance. In the last chapter, we have discussed about banking services. Under the banking services, we have done two types of services. First one is services related to the deposits. The other one, services related to the electronic cash. Under the services related to the deposits, we discuss about main three types of accounts. What are they? I think you remember. First one, savings account. The other one, fixed deposit account. The other one, current account. Right? Under the current account, we deeply discussed check transactions, advantages of maintaining current account, check crossing, general crossing, special crossing, check endorsement, factors to be considered when we are writing a check. These kind of factors, points we have done in the current account category. After that, we have done what? Electronic cash. There are main three electronic cash. What are they? Debit cards, credit cards and ATM cards. In each card, advantages, disadvantages, and this everything we have done in the last chapter. Right? Today, insurance services. You have heard this word insurance. Sometimes you may have life insurance policies. Sometimes you may have property insurance. It's like vehicle insurance policies. These things, right? Then simply I explain what is insurance. You remember there are 10 people. How many people? 10 people, right? This everyone anticipate for different risk in their life. To get some financial benefits to recover these risks, they can create a fund. Normally we can say it's insurance fund. We'll see here. You think this is the fund. This is the fund. This financial fund, right? These are the people, they put their money here. But I draw only few people, but you remember there are 10 people, right? These are the people, they put their money to this fund. Now they can create big amount of fund, right? Finally, this fund will give money. This fund will give money to recover the financial losses of the people who face practically for different risks. Actually, here the simple idea of the insurance is sharing the risk among the people. Sharing the risk, distributing risk among the people. Right? Now, we'll see to the slide. Insurance services. Right? Under this, the insurance collect premiums. Yeah, collect premiums. I told you that people put their money. That means collect premiums from individuals who anticipate different risk and pays compensation from that common fund to those individuals who have faced these risk indefinite. Practically, who get the risk, who face for the risk, this fund give their money to recover their financial loss. That concept is called what? Insurance. That concept is called insurance. We'll see again. The insurance collects premiums that people put their money like to that fund, right? Insurance collect premium from individuals who anticipate different risk. Who anticipate different risk in their life. And pay compensation. Yeah, the fund will give money, that common fund, to those individuals who face these risks indefinite. Right? Remember, Nimal is one of the person who put money to the previous fund. Right? Now, Nimal, out of these 10 people, face for a risk. Then this fund will give money to NIMAL to recover their financial loss due to the risk. Right? It is the simple concept. That's why I explained here. The same thing I explained here. Then insurance accumulates the risk of all into a single insurance funds. Hence, insurance is known as pool of risk. Pool of risks. Right? Then the basic insurance is accumulating risk. Accumulating risk is the basis of the insurance. I'll give here some examples for you, for you remember, right? Threat of fire, then fire damages, right? Fire damages. Burglary insurance, right? Then occupational hazards, flood and tsunami, these are the different risks. These are the different risks what you face, right? Now, these are the different brand names of insurance companies, right? You can see different names, government insurance companies and private sector insurance companies. These are the examples for the different insurance companies in the world, right? Now, parties involved in insurance. There are three parties related to insurance. There are three parties related to insurance. The first party. Who is the first party? The party who obtains insurance coverage. The party who obtain insurance coverage. Normally, we give a word for this. Insured. Insured. He is the insured. Remember, Kamal. Kamal wants to get insurance coverage for his life. Then Kamal is the first party. Kamal is the first party. If not, Kamal is the insured. Insured. Right? Now, second party. Second party. The party who provides insurance coverage. The party who provides the insurance coverage. We give a word for that. Insurer. First party is insured. Second party is insurer. Insurer. Right? Now, remember, Kamal wants to get insurance policy for his life. Then Kamal is insured. If not, Kamal is the first party. From where Kamal get insurance policy? From a certain insurance company. Right? Then insurance company provides insurance policies for the people and to the properties. Right? Then Kamal can select an insurance company. That insurance company will provide insurance policy to Kamal. Then first part is Kamal insured. Second part is that insurance company who provide insurance policy to the people. Right? Insurer. Now third party. Actually, agreement is made between first party and second party. Insurance agreement is made between first party and second party. If not, insured and insurer. According to this example, between Kamal and that insurance company. Then, who is the third party? We'll see. All other parties and properties will be affected by an insurance contract. The passengers and other vehicles on the roads, the passengers and other vehicles on the road will become third party when vehicle is insured. You think Kamal's plan was to get insurance policy for his, not for his life? You think Kamal's plan was to get insurance policy to his vehicle. He obtained insurance policy for his vehicle. According to this agreement, all other vehicles and all the properties what you can see on the road become third party in order to, according to Kamal's insurance policy. That part is third party. Now remember here, look at here. There are main three parties regarding the insurance policy. What are they? First party. First party is the person who get insurance policy insured. Okay. According to my example, Kamal. Kamal is the first party. Right? The second one is second party. Second one is second party. Right? Then who is the second party? Who offer insurance policy. Every time insurance company is the second party. Insurance company will offer, provides insurance policies. It is the second party. Now third party. Third party. Third party, think about property insurance, vehicle insurance. If you get vehicle insurance policy, all other vehicles and passengers on the roads will become third party. The parties who affected from someone's insurance policy. So that party is third party. Right? Okay. Now you know who are the parties related to insurance. Now this is very important area in this lesson. Why? In O-level paper, most of the years they will ask some questions in your MCQ paper and in the second paper to cover in this area. Right? So everyone pay highly attention here. Right? Principles of insurance. Insurance services is built on insurance principles of which a few are mentioned below. In your syllabus, we discuss only mainly three principles, right? Three principles of insurance. First one is insurable interest. Simply I explain now, but later I'll explain deeply. Insurable interest. Remember, if you want to get insurance policy for your vehicle, it must be your vehicle, your own vehicle. You should have legal right regarding that property or regarding the life to get insurance policy. For a simple example, remember, you can't get insurance policy for your relation's vehicles. Why? You don't have legal right regarding that vehicle. Right? If you want to get insurance policy for life or for the property, you must have a legal right regarding that. Utmost good faith. Yeah, utmost good faith. Remember, if you want to get the insurance policy, you must disclose all accurate and proper details, information to the insurance company regarding the insurance contract. Normally, if you want to get insurance policy for your life, sometimes they will ask from you, do you take alcohol? Do you take, you are a smoker? So you have to give proper accurate details to the company. If not, you break here what? The principle is utmost good faith. Right? Not only the insurance company also will give proper details regarding the insurance contract. Both parties should disclose all the details regarding the insurance contract is called what? Utmost good faith. The other one is indemnity. Indemnity. Indemnity means compensation will be paid only recover the damage. Compensation will be paid only to restate the damage. Actually, this principle does not apply for life insurance. This principle applies only for property insurance, right? We'll see here. I'll discuss one by one. Insurable interest. The legal right to obtain an insurance coverage for a life or for a property is known as insurable interest. I explained briefly before. Here it explains very clearly. You should have legal right. You should have legal right to get insurance policy for the life or for the property. Remember, husband and wife can get insurance policies for their each lives. Why? They have a legal bond between them. Why? They have an agreement, marriage certificate. It's a legal bond, right? So they can get insurance policies for their life. Why? So because they have a legal right about their lives, right? Then in property insurance, the legal owner such a property has an insurable interest. You can't get insurance policy for your father's vehicle. Why? The legal right goes to father because it is father's vehicle. If you have legal right regarding your vehicle, then you can get insurance policy for your vehicle because you have a legal right. Right? A creditor has an insurable interest over the life of the debtor up to the value of the loan. Up to the value of the loan. A creditor has an insurable interest, right? Creditor. Yeah. Remember creditor, you know creditor, right? If you have purchased something on credit basis from someone, from your supplier, right? You have to pay money to that party. You have to pay money to that party. That creditor can get insurance policy. If you are unable to pay money to that person, insurance company will give money to the creditor to settle their loan, right? Then that's here creditor has an insurable interest regarding the debtor only up to the value given by him, right? This is the insurable interest. Now you know insurable interest is, simply remember, you should have legal right to get insurance policy for the vehicle or for the any other property or for the life, right? Then examples, husband and wife have insurable interest for each other's life. In property insurance, legal owner can get insurance policy for the property, right? Creditor has an insurable interest regarding the debtors only up to the value of the loan given by him to the debtor, right? Now the next one, utmost good faith. Utmost good faith. We'll see. This principle states that both parties the insurance contract should disclose all the relevant information. Who are the parties? Not only one party, both parties, right? Both parties disclose all the relevant information accurately for the contract. This principle states that both parties to the insurance contract should disclose all the relevant information accurately for the contract. If one party does not reveal correct and accurate details, actually here that party breaks utmost good faith condition, then insurance contract will be cancelled because one party breaks this utmost good faith principle. I'll give the example for this, then you try to understand. Remember, Salia. Salia is a smoker. He wants to get insurance policy for his life. Then Salia finds suitable insurance company to get insurance policy for his life. He wants to get life insurance policy. He selected an insurance company to get insurance policy. Then insurance agent will come to Salia's home to explain about insurance policy rules and conditions. That insurance agent asks different questions to fill that application. The one question is here, what is that? Do you smoke? Then Salia says no. Actually, Salia is a smoker, but he didn't reveal this detail. He hide that information and he get the insurance policy. Monthly he pays insurance premium to the insurance company. After 3 years, Kamal has died. Doctors reveal what is the major reason, what is the main reason to death of Kamal is highly smoking. Highly smoking. Now you remember, does the insurance company will give the compensation for Salia's dependents? No. Why? Salia break utmost good faith principle. That's why here when you get insurance policy, you have to give proper and accurate information to the insurance company. Right? So, utmost good faith is that. I think you understood well. The other one is indemnity. Indemnity. This principle states that if a loss occurs to an insured property, the compensation paid should be sufficient only to reinstate the damage to the previous state. This principle does not apply to life insurance. Remember, indemnity concept will explain they will pay money only to recover the damage. Only recover the damage up to previous stage. For an example, you have a vehicle, the vehicle value is 50 lakhs. Vehicle value is 50 lakhs. But damage for the vehicle is 500,000. 500,000. You have an insurance policy. Will insurance company give 50 lakhs for your vehicle now? Why? Damage is how much? 500,000. Even though value is 50 lakhs, your damage is how much? 500,000. Then they will pay only 500,000 to recover the damage. Right? So, that concept is called indemnity. You must remember this. What? Indemnity concept is not applied for life insurance. Indemnity concept is not applied for life insurance. Why? We can't measure the value of the life. So, this concept is applied only for property insurance. We'll see another example. When a motor vehicle having a value of 2 million is insured for the same value. Yeah, 2 million is the vehicle value. Your insurance policy value also 2 million. You insured that vehicle for 2 million to the same price. A compensation of 500,000 can only be obtained for a damage value is 500,000. Even though your value of the vehicle is 2 million, the compensation will be paid only 500,000 rupees for the damage value of 500,000. They never pay more than 500,000 rupees because the damage value is how much? Damage value was estimated as 500,000. I think understood. Now I have discussed three principles. First one is insurable interest. You should have legal right for your property or for the life to get insurance policy. The other one is utmost good faith. Both parties means first party and second party. If not, insured and insurer, insurance company. Both parties should reveal proper and accurate information regarding the insurance agreement when you get the insurance policy. The third one is this indemnity. Indemnity concept is applied only for property insurance, not for life insurance. Right? What's the meaning of the indemnity? Indemnity says they will pay only the amount of money to recover the damage. Right? Now life insurance. Life insurance, after that we discuss about the property insurance. Life insurance. Insurance provides vital services. It means important service, essential services. Insurance provides a vital service for individuals. If an insured dies prematurely, his dependents can obtain the compensation from life insurance. Life insurance covers the risk associated with the life of an individual. Examples: accidents, health issues, surgeries undergone by individuals, and hospital charges, etc., can also be included as additional covers into the life insurance contract. Remember, life insurance is very, very important to you. When you deposit money in the savings account, you think you can earn interest for the value of the money deposited by you in your savings account. They will pay interest income for you. But you remember, you hospitalized because you want to do now a surgery, right? Then you have to spend money for this surgery. You think you had to pay 3 million rupees to do your surgery. You had only 3 million in your savings account. Now what you do? You withdraw savings account money and you can do your operation. After the operation, no money in your savings account. It's very difficult to continue life. Why? Because you have not enough money. But you remember, if you had life insurance policy, that insurance company will give 3 million rupees to you for your surgery and hospitalized expenses also. But they never charge the same amount of money. They never reduce that money when you get the insurance money at the end of the maturity. At the end of the maturity, how much the value, how much the amount of money they agreed to repay for you, the total amount of money they will pay for you, but they never reduce the amount of money they have spent for your surgeries. Then remember, most of the people, they don't know about the importance of insurance. Actually, if you can get insurance policy for your life, it's better than you maintain savings account, right? Now, insurance provide the vital service for individuals. If an insured dies prematurely, his dependents also can obtain the compensation from life insurance, right? These are the examples. Now you know. Importance of life insurance. Importance of life insurance can be used as a method of savings or investment. I explained it before. Actually, if you have a life insurance, it's like investment. It's like a saving. Why? For your surgeries, medical expenses, this everything will be covered through that life insurance policy, right? The other one, if the insured survives until the policy matures, the insured can obtain insured value and other benefits. If you have life insurance, not only the amount you have given to them, you can enjoy other benefits, other extra benefits from your life insurance policy, right? Next one, if the insured dies prematurely, the named dependents can obtain the compensation, right? You think husband died prematurely, then wife and children's can get money agreed by the insurance company to them to continue their lives. It is the other advantages. Can obtain financial assistance in case of marriage and education of children. Can obtain financial assistance in case of marriage and education of children's, right? Can be used as a collateral when obtaining loans from financial institutes, right? If you have a life insurance policy, it's a collateral. You can use it as collateral when you obtain a bank loan. Why? Remember, if you are unable to pay your bank loan, they can charge money from your life insurance policy, because if you have it, right, it's a collateral. These are the importance of having life insurance. What are they? First one, can be used as a method of investment. The second one, the insured survives until policy matures. The insured can obtain the insured value and other benefits, not only the paid amount. They will give after the maturity period, insurance company will give money, how much you have paid, plus interest and other extra money also, right? The other one is insured dies prematurely, dependents can get money from that insurance policy, right? Can obtain financial assistance in education of children and marriage. Then can be used as collateral when you apply a bank loan. You can submit your life insurance policy as a collateral, right? These are the advantages of importance of having life insurance. Now, the other concept is property insurance. Now, we have finished life insurance. Under the life insurance, we discuss importance of life insurance also. Now, property insurance. Property insurance is the insurance obtained to cover damages that might occur to property such as buildings, machineries, vehicles and inventories, right? These are the examples for property insurance: fire insurance, motor insurance, marine insurance and insurance for natural disasters, right? We'll see again. Property insurance is the insurance obtained to cover damages. Damages might occur to property. What kind of properties? Buildings, machineries, vehicles and inventories. To get money to recover this damage, you should have insurance policy to recover your financial losses here. That's why it says what? Property insurance. Importance of property insurance. Importance of property insurance. Cover financial losses arising in an organization from the various risks. Threat of fire, burglary, like that, right? You can recover your financial losses if you had insurance policy for the relevant properties when the damage is incurred. Remember this, you have a vehicle but you don't get insurance policy for your vehicle, right? While you are driving this vehicle on the road, you face an accident, the vehicle damages, you think 2 million. You have to spend 2 million rupees to recover your damages, right? Actually, if you had the insurance policy for the same vehicle, you think your annual payment close to 100,000 and 150,000. You have to pay as insurance premium for the whole year. But you remember, if you had the insurance policy, you have paid only 150,000 rupees for the whole year, you can get 2 million rupees from insurance company to recover your financial loss. But if you didn't take insurance policy for your property, for your vehicle, you have to bear that 2 million loss by yourself, right? So remember, property insurance is very important to you to recover your financial loss. Facilitate in conducting business operations continuously. Yeah, if you have insurance policy for your building, right, you can recover financial losses incurred for your building while you are conducting your business operation, right? If you didn't take insurance policy for your building, sometime you have to bear personally all the losses incurred to your building, right? So the other one is that supports both in domestic and foreign trade activities. Supports both in domestic, in local business activities and international important export activities also. That time also insurance will give big support to the businessmen to conduct their business activities, right? Then marine insurance, remember, then when you import some goods from another countries to our country, sometime you have to face some risk for your ship or for your goods import by you, right? You think if you import some goods from another country, you have to face different risk. Why? Transportation is done through on air or air transportation, no, sea transportation, you think, but you think about, we import goods through sea transportation. That ship or that boat or that medium of transportation will face for a risk, then there was the damage was for your imported items, you think 10 million. If you had insurance policy for your imported items, insurance company will give that 10 million money for you because you already taken insurance policy for your stocks for the items what you have imported from another country, right? Remember, that's why insurance is very important to the businessman to conduct their business operations, right? Then goods in transit, export credit insurance and cash in transit insurance. These are the different examples for property insurance. Now the next one, difference between life insurance and property insurance. Difference between life insurance and property insurance. Now we have done life insurance, importance of life insurance, property insurance, importance of property insurance. Now I am going to discuss the difference between property insurance and life insurance. See here, the value of the policy depends on the risk of the life and insured ability to pay. If you want to get insurance policy for your life, insurance premium can be decided by yourself according to your income level. You think about your risk, nature of the risk. Then you are considering these 2 points, you can decide how much you can pay monthly for your life insurance policy. If you can pay only 1000 rupees, you can start life insurance policy from 1000. If you want to pay 15,000 rupees for 1 month as insurance premium for your life, then you can get insurance policy for the monthly value of 15,000, right? The value of the policy can be decided by yourself. But you remember, think about in the property insurance, the value of the policy depends on the monetary value of the property. Monetary value of the property. You can't decide how much the value of the property. Insurance company will get insurance policy value. How they measure the market value of the property related to the insurance policy, right? So they will decide how much the amount to be paid by you when you get insurance policy for your property. But you can decide how much the amount ability to pay. Then you can start insurance policy by yourself. How much you can pay, they will create a policy for according to your requirement, right? Now policy value depends on the income of the insured, but under the property insurance, policy value depend on the value of the property. The second point, since the damage to life cannot be restrained, the principle of indemnity does not apply. You remember only this, indemnity does not apply for the life insurance. Why? Value of the life cannot be measured, but indemnity concept can be applied for the property insurance. It is the other difference. Since the compensation can be paid only to reinstate the property, the principles of indemnity does apply. Simply you remember this, indemnity concept is applied, their indemnity concept is not applied. First point, remember, first point is given how value of the policy depends on the income of the person, but their value of the policy depends on the value of the property, right? Now next one, benefits such as bonuses and interest etc. will be received in addition to the insured value. If you have life insurance policy, not only the agreed amount, you can get other benefits also. But you remember, no any other additional benefits in the property insurance. If you face a risk for if you have how much the value of the damage incurred to your property, they will give only the agreed amount to recover the damage, right? If you didn't face any risk or for an accident, they never pay any amount of money for you, right? So these are the differences between life insurance and property insurance. What are they? First reason, value of the policy depend on the income of the insured, but the other side, value of the policy is depend on the value of the property, right? Then here indemnity concept is not applied, the indemnity concept is applied. Here extra benefits can be obtained, but there are no such kind of benefits under the property insurance. We have discussed in this part about very important supporting service, insurance, right? Under the insurance, we have discussed definitions of insurance and life insurance, property insurance, differences between life and property insurance. Under this, we discuss specially, you must remember principles of insurance. Under the principles of insurance, we have discussed about mainly 3 principles. Do you remember? First one is what? Insurable interest. What's the meaning of that? Simple meaning of this, you should have legal right to get insurance policy for your life and for your vehicle or any other property, right? Husband and wife can get insurance policies for each other's life because they have legal right. The second one is utmost good faith. Utmost good faith means both parties should reveal all the details regarding the insurance contract. If one party breaks utmost good faith, it means if one party gives wrong details when they make an insurance agreement will be cancelled. The other one is indemnity. You know, indemnity is applied only for property insurance, not for life insurance. What's the meaning of the indemnity? Indemnity is what? Indemnity is compensation will be paid only up to recover the damage. These are the very, very important areas in the insurance category, right? In the next chapter, we discuss about communication and transportation, right? We'll see later in the new chapter. Okay, bye to everyone.